Hey everybody, happy Thursday. How we doing? Screen share's coming up right now. What's happening out there? Earnings on Altria up, beat earnings per share, revenue gapping up pretty strongly from the 50s up to 53.95. I do have some good exposure on this. I own the shares under 40 bucks. I'm trying to not get it called away for further upside, but unfortunately I can't do much with it to roll my calls, which I'd like to, but I'm not going to. So if it gets called away, I'm still making like $11 to $13 a share, which is totally fine. If it falls back down to fill this gap and we get back down to the low 50s, maybe I can roll it again and kind of play this dividend game. SPY is down today. So here's SPX. We had a big gap lower. Futures was down all morning. Let me go into this. Where's my 15-minute candle here? There's my 9:30 candle. There's my 9:30 candle. Is that right? Yes. So we had a nice clean breakout. I would be watching futures for something like this. If we have a break, retest, more downside, or break, retest, more downside, or if we come all the way back into this 15-minute breakout candle, let's say we go here and then look to fade that. I don't know. It's just down. Everything's down. So it's okay. I mean, the pullbacks are, everyone's been asking for it. I've been asking for it, and here I am seeing it. And it's like, oh my gosh, I wish it wouldn't pull back. That's what everybody thinks, right? But take a look at our levels. Here's our SPY. Here's the daily time frame. We are pulling back into a pretty decent level of past support. So here we go. So this week's candle officially turned red. Last week's candle's red. We had this slight pullback just over 2% from the all-time highs. This yellow box that I'm showing right here that's closest to price, this is the FOMC gap from the September Fed meeting. So we had this close to this rip higher. That is a big gap that hasn't been touched yet. So we came back to find a little bit of it right here, for some intraday support, but we have not come all the way back down to fill. So I'm not saying that we're going to, but it looks like if this floor, this was resistance over here, that was support, and now we are below that. So if that floor is breaking, pressure is to the downside to see if this gap gets filled. So be it. If that happens, fine. I have hedges for that exact reason. I actually looked at some of my trades this morning. If you're in my Pulver alerts, we have some hedges on ES and MES, and those are looking pretty good right now. And if they get a little nastier to the downside, they're going to look even better. So I want to take a look at those trades right here. So MES versus ES. This one is, let's see, MES is, that trade's looking good. It's up about $300. The other ones are down, so I'm break even on my MES. But if it goes lower, these should look a little bit better because I've got some time in the trade. ES is a little bit more active, but these are all hedges basically. So this one is a 111. That's for income. Hopefully that one pays out by the end of November. It's either a profit trap in a kind of ideal situation. We'd have to drop all the way to 4,800 for me to have any type of assignment here. Unlikely going to be the case. I've already got 90+% of the profit on the put side, and I have a bear trap as well. So adds up. So the trade itself is 3450 minus 401 or 4063 plus 1243. It's up $630 right now. So this trade is up about 630 bucks. And if I let it go all the way to expiration, it's going to be about the same thing. Probably another, there's another 10% of profit in there. So I'll get about $700 of profit out of that with no assignment. Obviously, it's a futures contract. I'm not looking to get assigned on it at all, but we have to drop all the way down to 4,800 for this to be a threat. Doubtful that's going to happen. So I'm okay with that one. And then I have the same type of trade here for another 3 trades. And let's add this one up. So I've got 600 plus on one trade. Here is minus 340. Minus 862 and plus 1275. So that one's up about 73 bucks. Now this one's way out of the money, but same thing. This needs another couple of percent. This one's probably just going to be full profit for a couple $100, to be honest. It was so far out of the money, it's probably worth $100, $150 max profit. This one is similar. So what do we have here? Let's go profits on these expirations. November 15th, this trade. We add this one up. So I've got a minus 460 plus 1140 plus 3655 minus 3982. This one's up $353. So all in all, I got about $1,000 of hedges working on ES. Out to the 8th, I've got this broken wing butterfly that this one's looking pretty good as well. Currently, it is around break even or so. Still got about 35 to 40% left in the trade. But let's see, minus 8,797 plus 16,425 minus 7,087. It's up 541 bucks. Okay. So do I take the profit now? I mean, it's out to next Friday. If we stay below 58.90, it looks better. If I show you the analysis on this trade, here's what it looks like. So there's the trade. This is where we're currently trading, right? I have a profit trap on this thing towards expiration next Friday. If we come all the way back up towards 58.90, let me take a look at this on the ES feed. So what does it look like on ES? 58.90 would mean we have to come, oh baby, this is actually looking pretty freaking good if you ask me. So that's a broken wing butterfly that has tail credit, profit trap, and then risk. Price would have to come all the way back up here. And guess where that gets me next week? Into my profit trap. So there's a way that I can turn, a $1,000 hedge into possibly a $2,000 to $3,000 gain if I get in that profit trap next week. So I think my goal on this one is if we're lower, I'll keep the $1,000 hedge profit, and that's right here. If we get this thing to pay $3,000 or $4,000, yes, please. And that would mean we have to come all the way back up towards the weekly highs. And I think going into next week with election, Fed, there could be some drama there. So I don't know. I mean, obviously I could be wrong and I could lose on the hedge, but if this one in some way just gives me $1,000, that's a pretty good win. So I'll see how it adds up. Okay. All right. Thoughts on Nikkei, Tesla. Yep. Take a look at that. Qs. Okay. Qs with a frowny face. Yeah, we'll take a look at everything. So that's actually I'm pretty excited about the ES feed. That broken wing butterfly is working out nicely and sitting on about $1,500 or so in hedge profit. But I want more. I mean, I'm not trying to be greedy. I'm just saying if I'm going to hedge, might as well make it worth it. The whole point of those hedges would be to get paid, 2, 3, 4 times what I'm risking to make it worth my while and offset any type of drawdown I'm sitting on. So if we go to the SPY, we're trading at 573. The levels I'm really watching, and I've been talking about this for weeks, right? Look, this is a 21 moving average. This is a 50. This is a 100. This is a 144. All I'm looking for is to see if price will find support. Find it and find support. Find it and find support. Same thing on gold. Same thing on stocks. If these are coming down to these dynamic support levels, I'm just looking to see if price will find support. Okay. So right now we're in between the 21 and the 50. If there's a little bit more pressure to the downside, I'm just going to wait. If we come down to the 50, maybe I put on a credit spread at the 50 or put on a bull call spread at the 50. If I come down to the 100, same thing. This to me, dynamic support, go out 60 to 90 days. I will 100% put a trade on. But for me, just to see that, we're gapping lower, I'm not that antsy to put on a trade right now when I've been patiently waiting for pullbacks. So we're finally getting them. The hedges are looking better, and that's what essentially I'm going to write off profit-wise. And then we got some earnings plays today. So, Meta beat earnings, Microsoft beat earnings, but they're both down today. Why? Futures market's down. Okay, fine. Stock market's down. Fine. I don't need to force a trade. Okay. So I'll wait. Qs, same thing. So the Nasdaq is in between the 21 and the 50 moving average. If we come back, it's the same thing. Do we find the 50? Do we find the 100? Cool. Let's find them and then see if we go higher. I think the Qs have, are they interested in finding all-time highs for the year? Probably. In my opinion, probably. As long as we're not doing any type of damage below this 470 level on the Nasdaq, if the QQQ stays above 470, I'm still pretty bullish. And I'm not even bearish if it gets below that. I'm just saying, like, this is the dynamic support and resistance that I'd want to see hold, right? So if we come back into, this level here, I'm looking to see if it will slingshot back up and try to get to all-time highs. That's just staying with the trend. There's a lot of support in these moving averages. I'll just be watching them. Okay. All right. Dow. The Dow's been pulling back. Same thing. Here's the 21. Here's the 50. If the Dow pulls back into here's the 50. If we pull back into this level, past resistance becoming support, that's right in between the 50 and the 100. If we see a close below and then a close above, I might put on a trade on the Dow, try to take this back to all-time highs. Could it come all the way back down to this level? Sure, we could have this big nasty pullback towards the 200, but I'd still be gladly taking some buy trades there on the DIA. Okay. So I'm just going to wait a little bit and see, if these sell-offs get a little bit more aggressive, fine. The nice thing about today is there is a gap here that eventually the market will be interested in possibly filling. So if it falls a little bit lower and I can position here or here or here, then that target would be a gap fill. And I can do that based on a debit spread or something. No big deal. Okay. And then the Russell, same thing. Russell's actually been a little bit more resilient today, not as bad as the other ones. Dow's down 0.7. Nasdaq down almost 2%, 1.82 on the Qs, and the SPY's down 1.31. So somehow the Russell's hanging in there with a point. What was that? 0.5, 0.7? Where's my Russell at? 0.56% down today. We have seen some interesting divergence on these indexes. It's like the Nasdaq's outperforming and the Russell's getting crushed, or vice versa. So it's an interesting shakeup between what indexes are performing best. Volatility is absolutely higher on the day. As we're going into major news, we had U.S. news today. We had PCE that was a little bit hotter. Year over year came in hotter than expected. If we have earnings this week, it's like earnings have been okay, but the bar was lowered so much that maybe the market's not that excited about it. Price to perfection. We've been talking about that. It's the reality right now. Even Microsoft beating, even Meta beating, Google, was up and it's fading. Apple and Amazon are today after market. I mean, we'll see what they give us. Mag 7, if the stock is dropping or futures is dropping, everything goes with it. That's the one downside about the stock market is even if stocks are popping, they can fade very quickly when the overall market's dropping. We take a look at the heat map this morning. I'm assuming it's going to be like all red. Yes or no? All red. Look at that. And led by your Mag 7s. Look at that. Microsoft had earnings yesterday, and they beat earnings on top and bottom. They beat earnings per share and revenue. NVIDIA's down 4%. Microsoft down. Semiconductors getting crushed right now. Meta's down 2.97. Amazon down as well. I mean, those are big market cap companies that are down on the day. That's dragging the market with it. Okay. But those are also large enough to take a top heavy concentration of market cap and drag the markets down too. So even though there's a decent amount of green sprinkled in here, it's not that great. I mean, advanced decline is probably, I was going to say we got 70% of stocks declining today so far. That's not great. So just be ready for, a bit of a pullback day, and it's fine. Pullbacks are good, everybody. I'm telling you, like pullbacks are okay. Pullbacks are justified and warranted when the market hasn't done anything but make 47 all-time highs. So I'm happy to see a pullback. I know it's going to look like, the sky is falling because the media takes it that way. Like every single day the market's down, people lose their freaking minds. But we're down like just over 2%. I hope we have a 3 to 5% correction and the market's healthy enough to buy that dip. If we get something nastier and it's, 5 to 8, 8 to 10, it's a little bit scarier, but it's still a dip. It's still an opportunity for longer term trading for sure. Okay. All right. Let's see here. SVXY. I'm sitting on that one. DXY. Still not ready to call a trade on the dollar yet. I think this is a lot of chop. Trades I'm in. Euro pound I'm in. Let me see the currency strength for today. Currency strength for the day. Japanese yen. Classic. Euro pound. Ooh, Euro pound looking good. Yep. Yeah, baby. Euro pound looking good. My Euro pound, I bought it around 83.45. Now it's up some decent profit, trying to get this back into 8,500. That would be coming back into this little dynamic resistance ribbon, possibly higher. I mean, this is major support. I don't know. We'll see what happens. Right now, this trade is up around 70 pips or so. I'm going to see if this gets all the way to 8,500. If it does, then I will cancel because I don't think I filled a one trade. So this trade right here, if it hits my profit, take the profit. I'm going to cancel that trade and then not have anything else running. So just going after a little swing scalp on the Euro pound. But that trade was posted last week, so doing pretty well. Aussie CAD, I started to get into Aussie CAD as well. I've got 2 levels on the Aussie CAD. I put this in my Pulver list for FOREX. I bought there. I'm buying here. My stop loss is below. And I'm looking to see if we just have another dynamic support level to see if we get back to the same highs or higher. I'm looking at 9,400 on my profit target. But I put a take profit at 93.80, which is the previous high. Okay, there's that one. I'm still long on my Swiss pairs, which looking at the currency strength chart, Swiss is a little bit stronger along with the yen. Let me see. My Swiss yen is doing okay. It's probably pulled back slightly, but not enough. Yeah, Swiss yen's fine. I'm like super tiny in this trade, and I probably will hate this trade. So if I get stopped out, I get stopped out. I'm not over trading it. Anything else? Currency wise, dollar index wise, I don't really like the dollar right now. I think we have a bunch of noise. We got non-farm payroll tomorrow. We got the Fed next week. The probability of the rate cut is still 98%. It's likely going to be the play. We have earnings that's pretty much heavy earnings this week. I'm not sure what other notables we have for next week, but let's find out. Let me go stock twits here. Stock twits. Let's go to earnings. Let's go to next week. So next week would be the 4th. What other notables do we have? Qualcomm, Under Armour, Sony. I mean, I know there's a bunch of them in here. There's a lot of stocks getting reported next week. I mean, I'm counting here. It's probably another close to 1,000 stocks. 165 plus 158 plus 354 plus 419. I mean, there's over 1,000 stocks reporting next week, and it's like, oh, there's 3 notables. So, I mean, there's a lot, but I think this is going to get lost in translation when it comes to the election, which would be Tuesday. The Fed is on Thursday. The market, what we talked about is if we don't have a winner, if we don't have a clear winner, if all of a sudden it's like, well, ballots aren't in, and this state can't produce a winner yet, they don't know the determining factor of popular vote versus electoral college. Probably not going to be a good sign for the market. So I would just expect more volatility to come in next week, and just be ready for it. I mean, I'm sitting here with $850,000 of buying power. So I want to trade something, but I'm not forcing a position to trade. That makes sense? There's no reason for me to be, you know, putting in heavy amounts of position right now when we could have pullbacks, dips, opportunities that I'd be glad to start allocating money to. But I'm not there yet. So I'm just going to be patient. I think there's plenty of good opportunities ahead, and I'm happy to see that we have some pullbacks finally coming into the election. This makes a lot more sense based on typical seasonality, which is a bit of a pause, a bit of a pullback as we go into the election week. Now, I don't know if the market actually thinks of the election as a big event. It's kind of more out there, like the emotions of the market's like, oh, there's all this uncertainty. But I also think the reality is we've seen inflation numbers come in hot. CPI, PPI, and PCE all came in higher than expected on the year over years. That's not a good sign. Okay, I looked at the bond market today, and yields are flat. Let's go to the 10-year yield. Okay, 10-year yield is up another 0.4%. Let's change this chart up. Hang on, sorry. Change this there. Let's go to this chart. Now let's go to the 10-year yield. So the 10-year is just continuing to grind. So, I mean, I do think the scary thing is if this rallies higher, this will end up probably breaking the equities market. In some capacity, whether we get to 5% on the 10-year or higher, the equities market will fold because the Fed cannot keep cutting rates as this is rallying, and the neutral rate is supposed to be something right around this 2-year. Okay, so the 2-year is trading at 4.2. The Fed is literally going to be there by the end of the year. Because right now we went from 5.25 down to 50 basis points jumbo cut for 4.75, another 25 basis points in November, which is next week, and we're going to be at 4.5. And then December, looking for another 25 basis points. The Fed in September to December, in 3 cuts, has decided cut 1, cut 2, cut 3, and we'll be sitting at the neutral rate. So what happens if the 2-year goes higher? I mean, does the Fed all of a sudden start raising rates again in 2025? I don't know. But it doesn't look good. So just saying, word of warning. The one thing I'm actually the most concerned about is this. Can everybody see this? The 2-year versus the 10-year has disinverted. The 10-year versus the 3-month, this is a very aggressive, rally towards disinverting. This is probably the one I'm most concerned with. So if this doesn't turn down, this is not going to be great, in my opinion. I don't think having the 3-month and the 10-year back in the disinverted side is going to be great. So this has usually led to a recession. This has usually led to some drama in bear markets. So I don't know. I mean, if we look at the 10 versus the 2, it's disinverted and it's kind of paused right there. But this 10 versus 3-month is just on a warpath to get back to the 0 line. So watch it. But this is the most obvious, longest, deepest inverted yield curve that we have ever had on the 10 versus 3 month. So, and we've talked about this for months and months and months. Something on the radar would be this disinverted 10 and 3 month. We did disinvert on the 10 and 2. All these things are kind of stacking up against the market, continue to perform higher. You may have read the report from Goldman Sachs this week that said, Goldman Sachs for the next decade is only anticipating 2 to 3% gain in the S&P. Well, there's the conversation of the lost decade, that the stock market is priced so high and priced to perfection that it's impossible to go higher at these valuations. I mean, Goldman Sachs is a terrible forecaster, by the way. I think they throw garbage into the headlines because they're positioned the complete opposite. So when they say something like that, I'd say the market either drops 10 to 20% or rallies 20%. I would not take like, oh, I mean, if it's 3%, fine. Then we'll just trade strangles and iron condors for the next 10 years and we'll make a fortune. But it's not going to be that easy. Okay. All right. But it is weird to see that the market is at all-time highs. The Fed is cutting. But the last time we did that in a cycle like this, it's possible this is still going to be treated a little bit like the late 90s, which still had some gas in the tank. So if the Fed is looking to get that late cycle expansion or even getting that late cycle reset, there's still gas in the tank. And this AI stuff, I mean, let me just ask a question. How many of you think that AI is going away? Nobody. AI is here. Okay. AI, sure, it's a little bubbly with prices and valuations, but it could also be Internet 3.0, right? And what it's going to do is it's probably going to make companies do more with less, which means more productivity, which probably means better profit margins, which means more cash on hand, less debt. Okay. I mean, the trick is, if you make more money as far as profit margins, hopefully you're not just throwing that into CapEx. Hopefully you're not just spending it to be like this AI infrastructure. And like we talked about, I think I said this yesterday on the show. The big deal with this AI infrastructure is we need energy to do it. And so I think an alternative play than just being long tech is being long energy, being long utilities, being long boring stuff that's considered value. But this year it's actually been showing signs of good performance. And a lot of those utility plays, especially, they have high levels of debt, which is not going to be great if we have rates going up. But if we have rates coming down, you would think that the debt restructuring would be a little bit more favorable. So they are typically low volatility, they're low beta, they're non-correlated, and they're, value plays. So if we have a rotation from, growth to value, that's one way to look at it. If we have more of the energy play, energy is a good diversifier from just being long tech, obviously. So there's going to be opportunities. That's all. So we'll see what happens. Okay. And yeah, that's another good point. Ryan says, I think it's awful for employment. I do too. That was my other point on AI. Companies are going to do more with less because they're going to fire a ton of people. And if you can't see that coming, then you didn't pay attention during COVID, because COVID was going to show that companies are coming back post-COVID, and now AI, they're coming back leaner and meaner and stronger. And companies now aren't even going public. There's a lot of tech companies out there that are using ChatGPT and using AI and using, large language models that are never going to go public, and we'll never see them traded in the S&P or the NYSE. They'll just stay private. And that's a whole nother bubble on the sidelines, because private equity is not valued the same way that public equity is. And that's a scary thing, because it's basically, if you're willing to pay for it, it's good. Does anybody watch the movie Arbitrage with Richard Gere? Okay, terrible movie with one of the plot lines, but as far as what he did with his business, that's what I think of private equity. He was basically a huge accounting error that was intentional. It was completely illegal, but he ended up packaging his entire business, selling his garbage to somebody else for what he wanted out for. And then he said, oh, by the way, my daughter's going to be your CEO or vice president, something like that. And the guy took it. So private equity is like that. If it's good enough for somebody else, sell it to them. And I feel like, I mean, if you look at like the Ivy League, your Ivy League endowments, I mean, Yale and Harvard, they have been underperforming for years and years and years because they are so heavily invested in this private equity stuff that it just shows like, yeah, there's no volatility. There's no volatility. But if it's not sold for anything profitable, it just sits on the books, showing that it's like, it's steady. But if nobody's willing to pay for it, it's freaking garbage. So anyway, AI is doing all that stuff. Okay. AI is great for corporate margins, bottom lines, but it's terrible for the employer or the employee. But that makes me think about companies like Tesla. Okay. Tesla And Elon Musk probably doesn't give a crap about any human employee. Elon Musk cares about running the world on robots. So if he does, Tesla could be one of the most profitable companies in the world. And if that mentality is taken through a lot of these publicly traded stocks in the tech world, well, it's good for investors because these stocks just make so much money. It's ridiculous, but it's terrible for the worker. So you got to wonder what is our country? If we're a country that's run by humanoids in high tech, I mean that's great as far as productivity, but it's terrible for the displaced workers where all of a sudden unemployment is 6, 7, 8, 9, 10%. We'll still have a recession if employment's bad, right? Absolutely, because 70% of our GDP is consumption. So if we're not buying stuff, we're not making money. And if people aren't making money, there's no tax revenue either. So just saying, it can get a little nasty out there if this is not all navigated. So again, I'm not here to be doom and gloom. I'm just saying there's stuff to navigate. There's going to be some tricky things ahead, but our job is to figure out how to trade it. I'm hoping we have some pullbacks. I think pullbacks are good. I think the market still has its eyes set on higher highs. I think it's easier to think if you're 3 years out, 5 years out, 10 years out. Passive investing and long-term investing is fine. But look at those bigger levels. Look at those 5s and 10s and 15s and 20s. If you've got dry powder and cash at the ready, deploying money at those levels will help make you gains in the long run. Big gains in the long run. Okay. The one thing that is difficult right now that kind of goes against the grain of these current gains, these current highs, is we have credit spreads that are as tight as they've been since 2007. And usually the returns on that are lackluster. When credit spreads are wider, it means there's more volatility. We typically see better gains over the next 1 to 3 years. But when they're tighter, we see like minimal gains, like literally 2 to 3% over the coming year or two. So I do think there's limited upside, but having a pullback of 3 to 5 to 10% is cool. There's at least upside there to revisit all-time highs. Okay. All right. Let's take a look at some other currencies and some requests. Um, Oil, yeah, oil too. I mean, oil is continuing to pepper that floor. We're trading at 69. It's up off the lows a little bit. I'm not playing this dangerous game of chicken on oil. I think that we keep testing this low. If we want to see the inflation story improve, I think oil ends up crashing through this floor. What makes inflation way worse and way hotter and way stickier is oil comes up here. But if oil breaks this floor, again, it's probably not a great sign for oil at all, and it could cause some more more tensions in the Middle East. But as far as energy prices, as far as gas at the pump prices, that might actually help our inflation data. But I don't want to call this and say, oh yeah, that's a strong support level, because it has been sitting here with literally conflict in the Middle East. It has been sitting here hammering this floor for literally a year and a half. And we're also making lower highs. So if we break this floor, this thing could be dropping fast by probably $10 to $15. So I'm not trying to call the floor. I called the floor a couple times and got fortunate on my CL trades that made some money. But I'm not trying to. I have 0 positions in oil. But I think it's something we have to watch. Okay. DXY dollar yen. Yeah, DXY is still sideways pathways. I mean, I like the dollar as far as there's a lot of pairs attached to it. If I go to my dollar crosses, Aussie dollar, we're sitting right in the middle of this bigger range. What I'd love to do on the Aussie dollar would be somehow this thing give me some support, and I'd be looking to scale in and level in on Aussie dollar there. Okay. I think China is also a factor with the Aussie dollar to turn up. If we go New Zealand dollar, Aussie dollar, I think China is a big factor here. One thing that could be coming out of the election for us, US election, is once it's clear, I wonder if China is going to be more vocal and have another, I don't know, maybe they'll actually dump more stimulus into the market, maybe another 100 billion US dollars, another 5 trillion yuan, whatever it is. But if they can lift animal spirits by the end of the year, I think the Aussie, New Zealand do a little bit better. I'd prefer that they were at a level of support that we can buy from that looks pretty technically solid. So down here would be like 64, 63, and 62. I'd be looking to buy, Aussie dollar from there. If I don't get those levels, I mean, that's the unfortunate thing is maybe it doesn't come down low enough and I still get this move to go higher. I just didn't get the support that I wanted. But it's worth keeping an eye on. We go to New Zealand dollar. Okay, New Zealand dollar is much closer to a floor that I would say 2 spots. Okay, one, I've already got it marked. And then over here, same area. So there's lows around 58.60 and there's lows around 5600. I'd be okay trading small enough where I take a buy trade here, a buy trade here, and a buy trade here. And I just wait, because if that bounces or that bounces or that bounces, I like that to the upside. So I'm going to be patient. I'm not calling tops or bottoms on the dollar index. The dollar index has had that bear trap run and that big squeeze to the upside. It's sitting here going sideways right now as we have non-farm payroll tomorrow. We have the election and Fed next week. I'm going to let the dust settle. If it goes higher, cool. If it goes lower, fine. If it goes higher, this actually looks a little bit more attractive to me. The New Zealand dollar at 58.50, let's say 58.50 down to 5600. I like that area to be scaling in small and then working a position back into major support. I mean, we're talking about 2020, 2023, and current lows here in 2024. If that structure gets tested, I would love a buy spot there. I think that's good for a few hundred pips. If we have a range trade from 56 back to 64, that's a 800 pip range. Sign me up. So I'll be watching those levels closely. Dollar CAD, dollar Swiss, I'm still in those. So dollar CAD, I'm looking to get a breakout trade. This is another reason I'd be long. Dollar CAD is a nice way to express a short position on oil without having to trade oil. Okay. If the floor of oil breaks, dollar CAD is probably going to make a break through 1.40. And if we stack this move up, all this is a multi-year range. If we break this and measure it, dollar CAD gets up to 144, 145. BOC has been way more dovish than the Fed. Cutting rates a little bit faster. Their economy is in a lot worse condition than the U.S. is right now. I can see the CAD getting a lot weaker. So I'm stacking these trades up. They haven't been filled yet, but these are all my buy trades stacked up for a nice little gain. Okay. Euro dollar. I'm just going to hang out on this one. We started to turn up a little bit on the euro dollar. I'm not in this trade. I'm going to wait for a better support level. Maybe we get it, maybe we don't. But I think the Aussie dollar and New Zealand dollar are a bit better placed right now as far as the dollar index goes. I just want to see when those big levels hit. Okay, do I see the NQ pulling back to the 200? I think it already hit the 200, right? I mean, if I go to my charts here, one thing I am watching, and you should be aware of this, we still have a decent bar count. We still have a decent bar count running on the daily time frame on the SPY. So we have not hit the 200 in over 200 some bars. So that is 250 bars. Now that's not crazy overextended. You take a look at gold. Gold is down pretty heavy on the day, which is why I'm not buying these highs. I want to see if we have some dips and pullbacks. Gold has also been stretched out for over 200 and some days. Here we are at 272 bars on gold. Here's one trade that's a little wild and crazy. NVIDIA. Okay, NVIDIA turned nicely off those all-time highs. NVIDIA is at 400 plus bars on the 200 EMA, and this is why I was interested in calling. I'm trying to think. I had a trade in here that I lost on. I had a trade in here that I won on. I had a trade in here that was profit. I didn't call. I should have. I don't know. I should have done a bear put spread there. I didn't. Whatever. But I'm looking at this bar count as we stretched far enough away that I think price on NVIDIA is going to be reverting. Something like that. So, I mean, if we get the opportunity to buy NVIDIA in the low 100s, I'll buy it. Whether I buy the shares, which after the split, totally affordable, or I just put on more options and look at if I can just trade the direction. So let's go to the ES market. So ES is S&P futures. Do we pull back into my moving averages? Okay, look at my ES feed. This is starting to roll over. There's my 21, there's my 50, there's my 100. Look, if we roll over, look at this trend line break. If we roll over here and things get a little testier, this move to the downside, there's a 100, there's a 144, there's a 200. Also, there's a long bar count. So, I mean, we had a pullback in here. We had a pullback in here. We had a pullback in here. If we're having a pullback, I mean, I'm looking for this to offer up some dynamic support. That's all it is. And then NQ, same thing. We already tested NQ during that August 5th drop. So we hit the 200 EMA, but we didn't hit it. I know, I'll take that. I was like, we did hit it on the Qs, not the SPY. So could NQ fall? Yeah, of course. We could fall into this area, fall into here, but I'd be looking for dynamic support like all day. Now, I'd say dynamic support with defined risk because if it goes lower, well, obviously I'm not interested in being on the hook for owning shares. But if we have the highs here and we have the August 5th low, I mean, if we have a pullback, I'd like to take a stab at, buying this thing cheaper and then trading it back up to highs again and not taking out the August 5th low. I mean, are we in a worse situation than August 5th? I don't think so. I mean, August 5th was like the Japanese yen's going to break the entire market. Well, it didn't, and it hasn't, and I don't see that being like phase 2 of this. What I see instead is, well, I mean, we got inflation going higher, we got yields going higher, we got the Fed cutting rates at all-time highs. if earnings isn't justifying it, rates are coming down, but yields are going higher. The bond market is expressing higher volatility and higher inflation. I mean, the market can be volatile. We know that. But the first thing I said this morning was, we've been waiting for a pullback. We're getting it. It's okay. All I'm trying to do is have cash at the ready to deploy when I think it's a decent opportunity. So right now, the thing that's working for me is hedges. So anything I've been trading at all-time highs that is, profiting from any type of downward movement, I've got hedges on ES, I've got hedges on MES, I have hedges on NQ, and I have hedges on MNQ. Okay. And I also, on one of my income strategies, I have a hedge running on the SPY as well. And it's a way out of the money put. But if somehow we have like some catastrophic thing of a 5 or 10% drop, that might pay me like 1,000 to 2,000%. So anyway, that's what's working right now. I want to see where these levels go. I think we have enough drama in the markets that it's like, we'll deal with whatever earnings comes out tonight with Apple and Amazon. We'll deal with whatever non-farm gives us tomorrow. Next week is election week, and I think there's going to be more uncertainty around it, because if we don't have a deciding election by Tuesday night, who knows? Things get a little bit more uncertain. Okay. All right. Let's see here. YM's asking about Edge Finder. Go right to the top setups. That's the easiest way to use Edge Finder. If you're looking for trades, top setups are great. There's a video that I did for the team with the Edge Finder of how I use it day to day. One more thing, Nick, Chandler, and James, I can talk to you guys offline, but I do have a full options course that I wanted to give to anybody that has a VIP membership. So if you're doing the VIP bundle with A1 Trading and Edge Finder, and you buy my Pulver alerts for the one-time full price, I have a full strategy course that has 13 strategies. It's a 72-page PDF and 11 videos. So I want it to be that's a included bonus for anybody that signs up for the A1 Trading bundle. Like, get the VIP Gold membership, get the Pulver alerts, and that's a full course. I'm going to sell that course by itself for $497. But if you're a VIP member, all that stuff, then I want to give that to you as a big thank you, just so you know. Cool. All right. Graham says election's going to cause volatility if election ends up like Gore Bush court case. We don't know. Yeah, I don't know. And I hope, I mean, for election integrity, I hope that's not the case. I mean, that would feel like 2020 all over again. I hope that's not the case. I mean, right now, if you look at like your Kolshi, your Polymarket, your betting platforms, it shows that Donald Trump's going to be president. So it's not even close. It's like 63 to 36% or something like that. So I don't know. But the 538s and the other polls are showing a little bit tighter. I don't even know. I honestly have followed very little of it, but when we're seeing these huge bets, I mean, do they know something we don't, or is that just people being more vocal and saying like, I think he's going to win, I'm going to bet on it? It has nothing to do with actual voting. I mean, I think if you care about it, then go vote. But right now it looks like the voting machine, or I should say the betting engine, is showing that Trump is our winner. But you never know, because that could be the betting side and not the actual poll side. They could be two very different things. So anyway, that's that. So the question on the Qs, could it pull back? I mean, yeah, it could pull back. I would say that this is finally starting to show some signs of taking out recent levels. So if we take out this low, then we're just falling back into some dynamic support. Like I said, I would love a 100, 144, or a 200. I mean, if we get a nice little dip, let's say a nice little scoop at these lows, I mean, I'd certainly take a stab there and see if the market could just try to find these highs again. Maybe, just maybe, this high and this low, think about this. Is it possible that we have a range in the S&P? Is it possible that we have a range on the Nasdaq where we had this blistering 20+% pace? Right? And the market's up 20+%, gold's up 30+%, Bitcoin's up 100+%. Is it possible that the market just decides to go sideways? Oh my gosh, what a boring market that would be. Not for a trader, right? If we have support to trade, that is a brilliant market to make some money. But it means that we can't have this just stretched out. We're going to all-time highs again, booms and busts, And the reality is too, it's like, I say that because we could also cap our losses, where it's like, if the market doesn't have enough terrible stuff to justify tanking and crashing, then it just stays in a range that we have to figure out how to trade, So I still think there's plenty of support in here to buy until proven otherwise. But if we don't take out this August 5th low and we don't take out this all-time high, I'm ready to just scoop up some trades as low as possible. Not trade super long term here, but maybe out probably 45 to 60 days, maybe 90 days, and just look at some profit. It's pretty simple. Okay, but that's a big range. But it's only 10%, man. It's not that large, to be honest. It's only about a 10% range. This Q is a 15% range. From high to low on the Nasdaq, that's a 17% range. The Q's around 15% because we didn't have the futures feed, but this is around 15% top to bottom. So that is a big range, but percentage-wise, it's 15 to 16%. That's not gargantuan. That's manageable. I mean, 2015 and 16, we had a 20% pullback. 2018, we had a 20+% pullback. 2020, we had a 30 to 40% pullback. 2022, we had a 25 to 35% pullback. So a range of 10 to 15% is not a deal breaker. It's just a range, you know? So, all right. I'll give you a sneak peek here. I'm almost at the top of the hour. I'm not sure if Nick Phillips is coming on after me. Maybe yes, maybe no. But I'll give you a sneak peek here. So let's see here. Nick, if you're in the office, I'll hit you up on Discord after this. Chandler, same thing. I just want to get some feedback from you guys. Here is a look at my practical options. So these are all the videos that I produced for the course. This is the entire strategy guide. So strategies, all the risk graphs, explanations, broker platforms, 13 core strategies that I would be trading all the time in my Pulver alerts here. But what's nice is if you get the language of the strategies, what's an at the money, in the money, out of the money, what's a credit spread, debit spread, what's bullish, what's bearish, what trades am I looking at for bullish or bearish or neutral? All these are walked out or walked through thoroughly in the course. So this is just a video series, trying to make options a little less scary because it's so intimidating to have these stupid names of strategies. In fact, somebody today told me, Chris, what about the Batman strategy? And I'm like, what about the Batman strategy? No, I've never heard of it, but I looked at it and it's like 2 ratio spreads. Okay, so I put one on as an example, and it looks like a Batman. So I'm like, I get it. It's a clever name, but it's a very undefined risk strategy. So you have this potential profit, you have this credit potential profit, and then you have risk. But the risk is undefined on the asset. So if price is here, you have credit. So you can make money if price stays pretty much sideways. Price stays sideways, you make money. You get a profit trap, great. But it's undefined risk if price goes way higher or way lower. And it's just like every other range strategy. There is a point that you're going to have to take a loss. So it's not perfect. It looks kind of cool, but it's a fairly expensive trade. So I don't love it. I do like ratio spreads, but I like to do them on the put side, not the call side. So anyway, stuff like that, if that's like, I have no idea what you're talking about, that's why I have the practical options course, because stuff like that will start to make sense. Okay. All right. Any other charts? Any other requests? We went through some currencies. We went through gold. Let me take a look at gold and silver. So gold, pretty nasty pullback at 1.88%. Silver's down 3.5%. Son of a gun. All right. Let me check on silver on one trade. Silver, you better not freaking. Let me check on SI for a second. SI. Let me check and see if I have pending orders here. 1, 2, 3, 4, 5, 6, 7. I don't see anything. Did I get filled on that order? Let me check my history real quick. So chart history. I don't think I got filled on it, but I'm going to find out here real quick. So SI. And for the last, let's go 60 days. Okay, so it expired. Fine. So that trade is not in. I had a bull put spread on SI that I'm going to go ahead and just wait on. What I'd like to see on SI would be this. If we go a little bit lower, look at all this nice dynamic support. I'm looking to see if I can do the same thing where I can scoop up something down here, and maybe do a bull call spread at the backside of this trend line and then go long on silver again. Okay. All right, DAX. Yeah, we can take a look at the German DAX. We're probably off the highs a little bit. Europe was down, Asia was down. Markets were all down across the board. Oh yeah, that's a nasty day for 3 days in a row. That's just straight down in the DAX. But again, look at where we are. 2150. I mean, here's what I would look at next. If we have the 50 hitting the 100, possibly the 144, I like the DAX for some support. So between any of these levels here, if you're going out long enough, I'd say 3 months, 6 months, if we have any type of support and turn, all-time highs are achievable. We just want to see if the market can find support. That's it. So I don't mind it, but I would say I'd want to see this settle back into, maybe the 100 or 144. And I say that because if we come into the 200, a lot of times it's close below the 200, then close above it, and you're already missing out. So if I get a trade that starts around the 144, I'm oftentimes able to scoop up some of those bottoms and get a pretty accurate price there. So just food for thought on the DAX. But I would look to see if this does want to fall a little bit deeper. Try to find some nice dynamic support around those deeper EMAs. Let's see here. Yeah, stocks are down in China, so that's HSI. I had the FTSE was another one I want to take a look at here. So the FTSE, finally, it's breaking the lows. My strangle is no longer. I didn't trade this, but I was looking at how beautiful this chop was, and I'm like, man, if you could just sell a strangle here above and below, this would be just a killer strategy. But we're finally breaking. So look at the outer trend line. This has some pretty good support structure. Look at this potential low here back in August. So yeah, I would say there's no major damage done as long as we stay above that August low. So if we come down for 1, 2, 3 days and we start to turn off that trend line, there could be a chance to buy with a tight stop loss or to find risk and then see if this wants to get back into this chop again. That's it. I think that's a justifiable trade right now. Neil asking about option score. So 2 ways. If you are a member of the Pulver Alerts with a VIP bundle for A1 trading, then I'm going to include that with the purchase, or I'll have an on-demand page that I will share. It's going to be in my Discord, so it'll be like a on-demand video series that I'll post on my Vimeo page. So I have it a la carte. You can rent the modules for $50. Like if you want to just focus on, I just want to learn how to trade bullish spreads. Well, you can just buy that module for $50. If you want to take the whole course, it's $497. Okay, but I have a page on that on my Discord. But if you get the full bundle from A1 Trading and the Edge Finder and my Pulver Alerts, then all that stuff, I want to throw that in for a big old bonus. Okay, so that's DAX. What other charts? Yeah, we did the DAX. We did FTSE. Let's take a look at China for a moment here. HSI is not really doing any major structural damage to the downside. I do wonder if after the U.S. election, China has another round of vocal stimulus, kind of lifting animal spirits by the end of the year. I kind of hope that's the case. Alibaba's hanging in there pretty resilient. Baidu, fairly resilient. FXI, same thing. JD, same thing. On this note, let me see what OXY is doing. 50.07. I might end up doing a quick roll on this one. Take a quick peek before I go. Not sure if I need to be pulled off here at the top or I can go for a few more minutes. I'll go for another maybe 10 to 15 minutes. Okay. So let me check on OXY. I'm going to see if I can roll this beautiful bean footage. So the trade that I have on right now, right here. So I have the shares at 500. It's covered out to next Friday at 53. If this is trading for a low debit, fudge, man. I still get another 25 cents a premium if I wait a little bit longer. Let me see here if I roll. So I just want to look at it right now. If I roll it out, I've got to roll it out by a week, which is not great, but I want to roll it out and down. Let me see what my break even is. Now on the put side, I do have a put. If oil were to crash and OXY were to crash, I do have a long put that's very cheap, but could pay something to help offset some of the loss. Anyway, let me see if I just do a quick roll if it pays me anything. So if I look at a roll, if I keep the same strike, I roll it out a week, I get 34 cents on that trade. If I roll it down 50 cents, I'm actually losing on that. So I roll it down 50. Let me see what my break even is. That's the most important thing. Where did there it is. Okay, so let me go to my tracker. Let's go to OXY. So right now I have a break even of 51.99. 51.99. So if I were to roll it out another week, let me do the math here. So my break even is 51.99. If I collect 45 cents on the roll, and then get it called away at 52.50. I make 96 cents on 500 shares. I make 480 bucks. If I keep it at 53, I get 34 cents. So I'd go 51.99 minus 34 cents. Get it called away at 53. That's $1.35. I make 6.75. So let's see here. I think, oh man, if I roll it down further, this one would be just get me the heck out of this trade. So 51.99 minus 62 cents. Get it called away at 52. I make 63 cents. I make 315. That's probably the safer play, to be honest. So I think I'm going to do that. I'm just going to lower the cost basis and push my strikes down. So I will move this one strike lower out another week, lower my cost basis by 63 cents, still make some net profit on it if it gets called away. I can obviously roll it again if price, jumps up, but if it doesn't, I want to keep working my cost basis lower and lower. So in the event that I need to repair it a little bit more aggressively, I can. Okay. So I think I'm going to do that on OXY, and then let me check JD for a moment here. JD is in a similar spot where I go to, JD is here. I have the shares. I've got them covered out to this Friday. This one's probably trading for less. If it's less than 10-cent debit, I might roll it. Yep. So if I close that right now, hang on a second. If I just close this covered call, trading for 6 or 7 cents, to me, to wait for tomorrow to get 7 cents is not worth it. So let me look at my JD here. JD. 40.82 is my break even. So if I do a roll on this one, if I roll, so if I keep the same strike, I go out a week, I get 84 cents of credit. That's pretty darn good. That lowers my cost basis to 40 bucks. Let me do the math there. So I think I have 500 shares or 1,000 shares. 500 shares. Okay. So if I get the strike at 42, I go from 40.82 break even, take away another 84 cents, get it called away at $42 on 500 shares. I still make 1,000 bucks on this one. I'm going to do it. Okay. So I'm going to roll this one for hopefully 84 cents. Keep the strike at 40. Let me see if I go 41.50. So this is interesting. I can lower my strike by 50 cents and get $1, which I think makes it a pretty neutral trade. Let me see if this will work. So 41.82 or 40.82 minus $1, get it called away at 41.50 times 500. Okay, so I make a little bit less profit if I lower the strike. But I also bring the cost basis down a little bit deeper. If I want to just straight up repair this one's probably a little bit less exciting. Yeah, it's a lot less exciting. All right, never mind. So I think I get 84 cents there, $1. Let's see here. Is it possible? 42 looks okay. 42, let's go to JD. 42 is in this little cluster. I'm good with that. I'm going to roll it. So 42, I'd like to make 1,000 bucks. I'm going to try. Okay. So I'm going to roll this out. So I go out a week. I close out the 42 call. That's this Friday. I roll it out 1 week. I keep the same strike. I get 85 cents. Hopefully it fills. 82 is the bid. So that's the least amount. This will help me make about 1,000 bucks if I'm right. So let me roll this bad boy. So that account's good. Let's see if I can roll it for 85 is not filling. Let's go 84. 82 is the bid. Give me a little bit over the bid, would you? Come on, man. 82. You're going to fill me at the bid, you freaking robbers. All right, fill the 82 cents. So next up, same thing. JD, this one just has puts. That one's fine. This one has the shares. So call, quick roll. Pretty simple, 85 cents. See if I can take this one on this account. 85 not filling, work it down to 83 cents. 82 is the bid. Not filling, just taking the bid. Son of a biscuit. All right. 82 cents, no problem. Next up here, that is just some shares. This one, own some shares. There's my covered call. Do a quick roll. And let's go. Hopefully 82 cents will fill. You son of a gun. So 81 cents on this one. What? Come on, jabroni. 82 bid. Let's go. It got canceled. You got to be kidding me. Working. All right, I'll let that one marinate for a second. That's surprising it's not filling. Let's check the positions here. Just some small shares and just some small shares. Okay, so all the trades that have it for income, I rolled this one out to next week. This one just has naked puts. This one I have shares. I rolled that to next week. This one I'm trying to roll the next week. Not filling at 82. I mean, I guess I'll take 80 cents, you freaking slime balls. Filled to 80 cents. All right, so that's going to change my break even a little bit. Let me have a look here. So I've just got to update. So I did a roll on OXY, or I'm sorry, JD. Let me update this. So this is rolled to 11/8 expiration, $42 covered call for 80 to 82 cents, which gives me a new break even of $40 to 40.02, which would give me exactly $1.98 to $2 per share of profit. So if I get it called away for $1.98 a share, 1.98 times 500, I make $990. If I get it called away for $2, I make $1,000, and that is out to next Friday. I'm gonna do the same thing on OXY, but there's still a little bit of premium on OXY that I'm gonna let marinate. I might do that one on Monday next week, which would just be a new covered call. So anyway, that's that. Gold, Gerald, same thing on gold that I've said. I'm just waiting for a pullback, man. It's pretty simple. Gold is pulling back today nicely. Great. I want it to pull back more. How much more? How about a 21? How about a 50? Right? Find me some dynamic support. I mean, this has been a very healthy trend for a long time. We're finding just barely support in here. So if we pull back to this level, interested in putting on some more positions. I will trade GC and GLD to add some exposure to gold. Okay, same thing on silver. I'll trade SI and SLV if I get the pullbacks that I like. Gold is pulling back. I'm happy with that. I want to see some more. I want to see some deeper pullbacks. Okay, everybody, I'll let you go for today. Real quick, like I said, if you add on a VIP package for the, kind of the full suite where you get the A1 Trading Edge Finder. I know they're doing a bundle with like the stock box. You get my Pulver alerts, all that stuff. If you do a full pay there, I will give my Practical Options course to you as a thank you. If you just want to buy the Practical Options course, that is an a la carte thing that I'll have in my Discord. But obviously, the best bang for your buck is going to be do the bundle. Cool. All right, sounds good. All right, buddy. Thanks for being with us today, and we'll be back tomorrow. Non-farm payroll is tomorrow morning. We've got earnings today on Amazon and Apple, so that'll be a big one to watch. We'll see what the market does. What? See ya. Bye.
Thank you for watching today's A1 Trading Show. Make sure to subscribe and to turn on post notifications so you don't miss the next one. We're looking for more guests to come on the show. If you're comfortable being on camera, have trading experience, and you're looking to grow your audience exposure, we'd love to have you on. You can fill out an application with the link in the description below. That's all for today. Trade safe, and we'll see you tomorrow.